रुख करते हैं एक ख़ास पेशकश की ओर। आदित्य बिरला सन लाइफ म्यूचुअल फंड वॉयाज 2024 चल रहा है। हमारे सहयोगी अजय शर्मा आदित्य बिरला सन लाइफ एएमसी के को हेड फिक्स्ड इनकम कौस्तुभ गुप्ता और के साथ यहाँ पर जुड़ गए हैं और उनसे बातचीत कर रहे हैं इस इवेंट पर। तो चलिए सीधा वहीं का रुख करते हैं। अजय, ओवर टू यू।
And rather he concluded that although all of us want or try our luck or we think that we have this ability to predict future, but we are living in a bit of an uncertain environment. So when Dr. Krugman and likes of Larry Summers, they were on the extremely opposite sides to each other last year, and what actually played out in 2023 was in nobody's radar. When the global economy was expected to slip into recession because of the unprecedented rise in interest rates, actually 2023 turned out to be a lot more resilient economy. And Fed, which has been, you can say, consistently getting wrong in last 4 years, both in terms of their projection of growth and inflation, despite having a battery of hundreds of economists in their research book. Now, all these are testimony that kind of an uncertain environment that we are living in. And which is why I'll agree with, to some extent with Dr. Philman that macro environment in current regime is actually a little bit of untested waters. And the real reason in our understanding is that because for the first time in the history of finance, post-COVID world, both monetary and fiscal policies, they are talking to each other in a same direction, at least till middle part of 2022, which means that COVID was a health crisis, but the response which was given as from the fiscal and monetary side was an unprecedented easing, both on fiscal part and monetary part. Never ever in the history of finance, barring, you can say, a small period of wars in 1960s, this has been tested. And which is why, when monetary policies are trying to unwind, unlike the conventional monetary response, it seems that this time the response is too delayed. And fiscal authorities, they have realized now that it is much easier to expand, but it is very difficult to contract back. Which is what we are seeing, what's happening on the US side of it, that their fiscal deficit is unprecedentedly in the peacetime talks, that growth is doing great, inflation is falling, but still their fiscal deficit is running at a closer to 6 to 7%. And so that's not, it's just the one side of the story. The other side of the story on the China, which is what he also tried to emphasize, that Chinese authorities, it seems that they are running out of the solution to take their economy out of the bad patch they are into. To summarize, I would say that last 40 years, there has been two large drivers of policy making and macro environment. One is China, which was which became the producers of the world. Another is the US, which became the consumers of the world. And rest all economies, they were really muddling through. And as a pack, emerging markets and developing countries, they didn't make so much of a difference. Now, that has changed in last 10 years. Post-2008, it started the change. And post-COVID, that change has become even more pertinent in the sense that for the first time, the uncertainties on economics, uncertainties on geopolitics, uncertainties on fiscal response, uncertainties on the impact of monetary response is paramount, and which is why we are living in a, at least as far as the global platform is concerned, we are living in a little bit of uncertain, uncharted territory, which opens both opportunities for India and threats for India. Opportunities in the sense that there is a vacuum which is being created in the world order, and there is a place that India can grab on it. And threat in the sense that when so much of uncertainty is there, there is always a chance of accidents, whether it's on geopolitical front or it's on economical front.
In fact, the third accident could happen in your portfolio front as well. triggered by the points which you said. And that also, increases the need of having a cushion of fixed income or perhaps credit side and not go completely all out on equities alone in the portfolio. So that, how do you, a good liquidity position or some exposure to certain returns, fixed income, can actually help you glide through these uncertain times. I mean, anything could trigger a big crash, right? And if you're not prepared.
Yeah, so look, it's a basic question on the asset allocation part of it. Now, when you look and to invest, and for that matter, the general advice is that don't put all your eggs in one basket, right? And the reason is that at the thesis of investment philosophy is that the variety in the portfolio should be in the sense that it should be counter-cyclical to each other. So in current paradigm, I would say that when we look at investing as a asset allocation cycle, we should look from the perspective of macro asset allocation. And macro asset allocation doesn't mean 0 and 100. Macro asset allocation means that at all point of time, your overall asset allocations need to have a particular percentage of your overall portfolio into a variety of asset classes. Now, you can change the weightage of those asset classes depending on the macro environment that you are living in, from debt, equity, physical assets, real estates, and other alternatives. But you just can't say that in a particular asset class is an answer to all sorts of your problems.
That's a great point. That's a very